Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darksey here to bring you the daily recap. And today we had what was really a choppy day in the market. We were lower for most of the day. It looked like we might bounce back to the flat line, maybe go positive, but just couldn't really sustain that juice to take us positive. So we ended the day with mild gains to follow through on yesterday's weakness. Not a ton of momentum to the downside, but we did break some more upper level supports that could perhaps lead to some more downside, but it still doesn't feel like this market, anybody's panicking. There's not a whole lot of fear. We have seen a few, 4 or 5% pullbacks over the course of this year. This is not one of those situations where it feels like there's a lot of aggressive selling going on. It's, there could be some tax motivation selling or something of that nature right now before we perhaps get into the holiday period. But anyways, we are getting a slight pullback, but nothing too significant. You take a look at the chart of the SPY. You can see yesterday we had that harsh selling, some of the harshest selling that we'd seen since early October. Some people were looking perhaps for a little bit of a reversal type setup today. I think it was a little bit of a tough spot this morning because, yes, we did have somewhat of a harsh down day yesterday, but we had been up so much over the past month and a half, 2 months, that it was hard to really complain about a little bit of a pullback. But it was also, it's tough to short after a big down day, but it was also not quite oversold enough to buy yet. And so I think what most people did is they, in terms of an index perspective, they sat on their hands a little bit and just tried to be very stock specific, which has been the theme that we've been talking about for the past few weeks. And I'll just go straight into some of the stuff that we talked about in the morning call this morning. Brittany and I, we talked about the social media stocks that yesterday in that sell-off, the market, the S&P dropped a little over 1%, but you saw some even bigger pullbacks in some social media names, these names that have been extremely strong, that have been leading the market up of late. And the top of that list was Twitter. And we noted yesterday that Twitter actually, while some of those social media names got a pullback, Twitter actually finished with a 0.7% gain. And that was a little bit tough to call. And if you missed today's move, I definitely wouldn't beat yourself up over it. We'll take a look at the chart while I explain the rest. But talked about how, yes, it was extended going into after the last few days price action. This morning it was extended, but it did show relative strength yesterday. So it was a little bit, there were reasons to think that it can continue higher, and there were reasons to be a little bit cautious based on the tail we saw yesterday. But the relative strength is what held true today and sort of trumped everything else. And so we got another really impressive move in Twitter. This stock, nobody loved it after the IPO in the high 40s or high 30s, low 40s. Then suddenly they announced some new ad technology that could potentially help with their bottom line numbers when they start reporting earnings. And suddenly everybody wants to own it. And I think one of the big things with Twitter right now is that with Facebook, they came out with a very high-priced IPO, high valuation on the company, but also a very large float. Tons of shares went into the public market. Whereas Twitter, the IPO ended up opening for trading at a very high valuation, but the float is relatively small. And I think there's a lot of demand that's out. It's just outpacing supply right now. That's what you see when a stock goes higher, and people just continue to buy this thing higher. And who knows how far this could go. I think it's definitely hard, very hard to buy it after 6, 7, 8, 9 days up, however many it's been. But a really impressive move from Twitter, something to take note of. And then the other social media stocks joined in today, particularly Facebook, as the main one that we focused on this morning as well. Take a look at the chart. We talked about last night, the big sell-off that we saw as a potential sign that these social media stocks might need a rest, or at least Facebook might need a rest, and LinkedIn as well. But what we got was that news last night that Facebook is going to be added to the S&P on December 20th. So a big validation of the social media sector, as well as just a big PR boost for Facebook. And so we saw a gap and go to the upside. We erased all of yesterday's losses with that gap, opened above the previous 2 days high, briefly tested those highs, but then rallied and put in a really impressive gain there for Facebook. This is one that I think could continue higher. Obviously, the S&P news sort of came out of left field after yesterday's pullback. Probably shook some people that were long out of the trade idea, but that's one that we listed on off the charts. It definitely didn't breach any stop levels or anything like that. So if you were swing trading it based on the entries on off the charts, then you're still sitting pretty, you're still sitting long. And we'll just take a peek at LinkedIn. Wasn't as notable, the action today. It seems to be one of the weaker ones in the group right now, whereas Twitter is obviously making new highs, and Facebook seems like it's on the road back there today. LinkedIn didn't get any of that residual impact from the Facebook S&P announcement and put in a little bit of a doji. Looks like it could remain the weakest among that trio. Today we also had some interesting action within the retail sector. I'll jump to a stock that was on off the charts a couple days ago. First, we listed UA on off the charts, I believe it was Tuesday, as a potential long, and yesterday is when UA performed really well. It did close off its highs, and then today was a little bit volatile. UA in general is a thin stock that's a little bit tough to day trade because of the thinness, lack of liquidity, but still holding higher after today's volatility. But the one that went today, where it was weak yesterday, was Coors. Coors is the one that we listed with UA as a new trade ideas this week, and yesterday, a very discouraging start, as you saw it basically exactly match the previous day's candlestick. But today engulfed those previous 2 days with a really nice igniting move to get right above this pivot here that was around 82.50, and looks like it has its sights set on highs, which is just not too far away. 83.13 is that pivot high, so definitely I think it could get there and get some momentum if it gets above that level. And I know Michael Kors can be a positive or a very popular gift around the holidays for young ladies, so definitely something to keep an eye on there. Within the virtual trading floor, or first I'll go to Lulu also in retail. Lulu, no setup here. We haven't been talking about it off the charts or anything like that, but just interesting to note this stock obviously had some bad PR of late with their founder and former chairman of the board now. He came out and said that overweight women shouldn't wear Lulu pants, and that's what causes them to be see-through, is that they get stretched out too much, and obviously that was terrible PR for the company. And then they just replaced their CEO also, which I think is a positive step. The old CEO was very much admired and respected, but she announced that she was stepping down, so there was a lot of uncertainty going into who's going to be the next CEO, but they announced someone who has a really strong background in leading retail stocks into the global market, but really weak earnings from Lululemon, perhaps as a result of some of that bad PR, and also from the stretchy pants incident, or the see-through pants incident rather, where they had to recall those pants. So, but you take a look back at a monthly chart of Lululemon, you see how far it came, but you see how much it's pulled off highs as well. It'll be interesting to see. We sort of have an upper level, more gradual uptrend that's been in place since late 2010 that is now getting threatened, and you could even say it broke it. I'll fix my line here a little bit. So it'll be interesting to see whether on a monthly basis we get a close out of that more gradual uptrend that's been in place since basically the start of 2011. Today's candle took us below it, but it's a matter of whether we're able to bounce from today or whether Lululemon needs to test deeper support levels. And the next level to watch on a monthly chart, after if we accelerate below this low of 53.60, would be a low all the way back from summer of 2012, August of 2012. The low would be 52.20. So definitely something to keep an eye on there. Is this a bad sign for retail? Who knows, but just something to take note of with Lululemon, and a potential opportunity maybe if we get some more downside for a red dog reversal type setup. The virtual trading floor today, we have a great team of T3 Live contributors in there. We have Mark Sperling, we have Scott Redler, all the names that you obviously know if you've been on the site and been in our community. But every year we add new subscribers, and our subscribers generate a ton of value for the community as well, and especially a select few of them generate, I think, maybe more value than some of the other ones. We love you all anyways, but R. Durant is a member of the virtual trading floor, tremendous contributor, offers great ideas, and this morning he continued to offer some really tremendous ideas. Before the open, he was talking about a stock, CYTR, pharmaceutical biotech stock that came out with an announcement last night about some cancer-related treatments. And I came in this morning, I was in early doing the morning call with Brittany, and I popped in the VTF afterwards. R. Durant's in there talking about CYTR with a lot of conviction, talking about how he read through the report, really liked what it said, and the stock actually opened flat and gave you a tremendous opportunity to get involved if you were in the VTF paying attention to our man R. Durant. Take a look at the chart, and obviously the chart tells a very powerful story today. The stock was up over 50%, despite even pulling a little bit off into the close, but tremendous call out by R. Durant, tremendous analysis of that news that we got. Just an example of what contributors, in addition to the people that are on the T3 Live team, our subscribers offer a ton of value in the VTF as well, and this was a very stark example of that. And then also R. Durant was talking about SRPT, another biotech pharma name. Not obviously as big a move as CYTR, but you can't be spoiled for 50% moves every time you call out a stock. This one was up something like 20%. Really nice move after getting beaten down after some, I assume, some negative news about one of their drugs. But just another great opportunity. And off the charts, we like to highlight more calculated type setups, more clear technical patterns and things like that. But in trading, especially if you're an active trader and you have time to be in front of your computer screen, there's opportunities that present themselves intraday that we can't list as swing trade ideas on off the charts. And that's why the virtual trading floor is so valuable, is that you get analysis in real time as things change, as news comes out and things like that. So if you have that possibility of sitting in front of your computer screen and being active, I think being part of the virtual trading floor is a tremendous opportunity. We offer a 7-day free trial, so definitely stop in and take a look at it. A couple other things I'll talk about. 3D printing, also talked about in the morning call, had a bounce back today. 3D printing, you just can't keep this sector down. Yesterday you had a big wide range bar in DDD. The gap up couldn't hold and engulfed the previous day's price action, but then found support at the 8-day moving average like it has so many times over the course of this year. And right now just sort of in no man's land. I would say it's hard to buy after yesterday's big engulfing bar, and given the valuation on these names, I think in general this is a short-term trader's playground, and from a swing trading perspective I wouldn't play it in either direction. But also review a couple names that we put on off the charts last night as short ideas. We had that sell-off yesterday that was some of the harshest selling that we'd gotten in the last couple months. So we decided, you know what, let's throw a couple shorts on there, see based on some patterns whether we can get a little bit of downside and get some more two-way type representation on the off the charts watch list. And one of the names we talked about was Amazon. Amazon, while a lot of tech names, there's been a lot of divergences in tech, which is something that we've harped on. But Amazon's one that had a tremendous run through October, November, obviously making new highs. But it had this topping tail on the day after their CEO, Jeff Bezos, was on 60 Minutes talking about drone deliveries. And that was the punchline for Twitter over the next week or so, about drones delivering packages within 30 minutes of order on Amazon. Anyways, sometimes tops are made when headlines are made, and that's sort of what we saw, at least a short-term top. I don't think it'll be a long-term top in Amazon, but what we got was we got a down move followed by about a week and a half long consolidation. You could call it a bear flag based on this down move and then sideways action. So with yesterday's move to the bottom end of that range, we were looking for some downside follow-through. Didn't get a ton today, but showed some weakness. The market was also weak, so it's one that I think if the market does remain weak, or if the market trades sideways or is choppy, I think Amazon is another one that could show some relative weakness and at the very least go down to its 21-day moving average down here around 377, and the measured move I think would take it a little bit lower than that down to the prior breakout level after the gap. So something to keep an eye on if you want to balance your book a little bit with the market a little bit choppy at upper levels. Amazon, just an idea that we put on off the charts. And then also Wynn. The casinos I talked about this morning in the morning call as well, is that there's no bear flag or anything like that in Wynn, but what we saw yesterday was your classic red dog reversal, where we traded up through the previous day's high and then put in a tail and traded back down below it. Your entry is on a move back down below the previous day's high. And today we got some follow through to the downside. We were able to get a flat open, so if you weren't involved, you could have potentially gotten involved. It did close off its lows as well as close well off its highs of the day after some early strength. But it's one that I think, based on that reversal, you have a very defined risk level. You could even move your risk, your stop loss down to your entry to make it a break-even entry from the high on Tuesday. But just another idea that if you want to balance your book a little bit, have some shorts on for extended stocks that have seen big runs, then the red dog reversal in Wynn gives you an opportunity to do that. So just a few different ideas. The market's loosening up a little bit, which I think everyone will welcome into the end of the year. I think what people were afraid of was a very slow melt-up grind type action into Christmas, not giving too much opportunity to find divergences and get any sort of dips in stocks to buy. But instead today, after yesterday's washout, you got some really nice opportunities to get involved with stocks, and that's all you can really ask for. So this has been T3 Live Editor-in-Chief John Darcy here for the Daily Recap. I'll be back here tomorrow morning for the morning call.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit T3Live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.